Let's dive right into this explainer and unpack GE Vernova's Q2 2026 SEC Form 10-Q filing. Now, I know, SEC filings are usually a great cure for insomnia, right? But every once in a while, one crosses my desk that makes me do a complete double take, and, well, this is definitely one of those times. Today, we're going to figure out exactly what's happening beneath the surface of one of the world's most absolutely critical infrastructure companies.
Just look at this massive number. GE Vernova's 6-month net income, $5.4 billion. In the heavy industrial and energy sector, churning out a bottom-line profit of this magnitude in just 6 months that absolutely shatters standard expectations. I mean, it's the kind of number that practically begs for an explanation.
And here's our real mystery for today. If we look at the exact same 6-month period from 2025, their net income was $768 million. Fast forward just one single year, and we're looking at $5.4 billion. So how on earth does a heavy industrial company multiply its profit by over 7 times in 1 year? Did they suddenly invent a flawless free energy machine? Did they just sell off half the company? We're going to break down the actual filing to find out.
So, Section 1. Who is GE Vernova?
Well, before we can solve that huge profit anomaly, context is everything. Based in Cambridge, Massachusetts, GE Vernova is a purpose-built company that recently spun off from General Electric. They've reorganized into 3 highly focused core segments. You've got power, which handles foundational dispatchable energy, things like gas, nuclear, and hydro. Then there's electrification, covering power transmission, grid automation, and storage. And finally, wind, covering both onshore and offshore turbines. But the really crucial takeaway here is their sheer scale. They actually help generate about 25% of the world's electricity, meaning there's a very solid chance the device you're watching this on right now is literally being powered by their technology. When a company with this kind of massive footprint sees a 7-fold profit increase, believe me, it sends ripples through the entire global energy market.
Moving on to Section 2, top-line growth and profit.
Because a healthy bottom line usually starts with a healthy top line, let's look at the operational data. This consolidated statement of income pulled directly from the filing proves it. You can see a structural, massive leap in both their sales of equipment, going from about $4.8 billion up to $6.4 billion for the quarter, and their services. They aren't just selling more hardware, they're successfully servicing that gigantic global installed base we just talked about. The operational growth we're seeing here is honestly fantastic. They organically jumped from $9.1 billion in Q2 of 2025 to $11.1 billion in Q2 2026 revenue alone. For a mature, heavy industry company, adding $2 billion in quarterly revenue year over year is a staggering operational achievement. It shows really strong market demand and incredibly solid execution.
Which brings us to Section 3, solving the income spike.
Yeah, strong revenue growth alone doesn't entirely explain our anomaly. Let's do the math together. If their revenue grew by roughly $2 billion for the quarter, and maybe a little over $3 billion for the 6 months, how on earth did net income skyrocket by nearly $4.7 billion? You can't outpace total revenue growth purely by selling more turbines or grid software, right? Something else had to have happened on the balance sheet.
So, the secret lies in a highly specific concept called a remeasurement of equity interest. In plain English, or at least as close to plain English as accountants ever get, this is a maneuver where a company recalculates the value of a previously held stake in a joint venture the moment they acquire full control of it. It essentially means recognizing hidden, accumulated value when you officially take over a business.
And here is the exact catalyst for that. According to the 10-Q, on February 2nd, 2026, GE Vernova spent $5.25 billion in cash to buy out the remaining 50% stake of their North American transformer joint venture, a company called Prolec GE. Previously, they only owned half of it, so they didn't fully consolidate its value on their books in the same way.
And Note 8 in the filing? That's our smoking gun. By acquiring full control of Prolec GE, GE Vernova was required by accounting rules to remeasure their original 50% stake to its brand new fair market value. Because Prolec GE had grown so massively in value since the joint venture started, this single paper recalculation triggered a whopping $3.99 billion pre-tax gain. This was recorded as other income on their income statement. So, a huge portion of that $5.4 billion mystery profit wasn't from selling more gear this quarter. Actually, it was a one-time accounting gain from unlocking the value of a brilliant strategic acquisition.
But wait, there's actually more to this buyout. On top of that gain, GE Vernova recorded $5.3 billion in newly acquired goodwill on their balance sheet. Now, in accounting, goodwill represents the premium paid over the fair value of physical assets. According to the filing, this massive $5.3 billion largely represents the immense value of Prolet GE's 10,000-person workforce across the Americas, plus the future operational synergies of integrating them into GE Vernova's electrification segment. They are betting heavily, and I mean heavily, that controlling the North American transformer market will pay massive dividends down the road.
All right, Section 4, buying, selling, and restructuring.
A really smart company doesn't just buy, it optimizes. If we look closely at the cash flow and restructuring notes, GE Vernova was actively managing its portfolio in Q1 of 2026. They sold off their Prophecy manufacturing software business for $598 million, scoring a $330 million pre-tax gain right there. They also sold the Linden VFT merchant transmission facility for $138 million. By shedding these assets, they streamlined their core focus onto their primary energy equipment and services, while simultaneously injecting nearly $750 million of fresh cash into their balance sheet to help fund moves exactly like that Prolet GE buyout. Honestly, it's a total masterclass in portfolio rotation.
Moving on to Section 5, future revenue and risks. Having solved the profit mystery, the real question for a company powering a quarter of the globe is, well, what's next? And the answer lies in this jaw-dropping figure, $176.2 billion. In SEC terminology, this is their remaining performance obligation, or RPO. For those a little less familiar with the jargon, RPO is simply a massive backlog of guaranteed future revenue from signed contracts that haven't actually been fulfilled yet. To put that into perspective, that is years and years of future revenue already locked in the pipeline. It's staggering.
Breaking down that $176 billion backlog, we can see exactly when this cash is scheduled to hit their books over the next decade. Their equipment backlog is $87.8 billion, which turns over relatively quickly, about 36% in the first year and 97% within 5 years. But look at the services backlog, $88.5 billion, with 79% expected to be recognized over a 10-year horizon. This provides GE Vernova with a highly predictable, incredibly stable foundation of long-term cash flow. They aren't just selling turbines, they're locking customers into decade-long relationships to maintain them.
However, no explainer would be complete without looking at the fine print, right? Their forward-looking statements meticulously remind us that realizing this massive $176 billion backlog is heavily dependent on a highly complex, constantly shifting landscape. They specifically cite the risks of decarbonization and energy transition dynamics right alongside changes in energy, environmental, and tax laws and policies. So they're building the infrastructure of tomorrow, sure, but they're entirely reliant on global governments actually sticking to their promises regarding grid investment and carbon reduction.
So, as we wrap up this explainer, I'll leave you with this final provocative thought. We've solved the $5.4 billion profit mystery. It was a mix of strong operational growth fueled by a massive strategic buyout of a transformer giant. We see they have a staggering $176 billion in future contracts waiting in the wings. But the ultimate question remains, how will global macro trends, geopolitical shifts, and ever-changing environmental policies ultimately dictate the fate of the world's largest energy portfolio? Will the global energy transition accelerate their dominance, or could policy stalling create a bottleneck for the grid of the future? It's a genuinely fascinating space to watch, and the data in this filing proves that GE Vernova is right at the center of it all. Thanks so much for diving into the numbers with me today.